Well, to tell us what could be necessary, I'm joined in Istanbul now by Goldman Sachs chief economist Jim O'Neill. Jim, thank you so much for joining us today. Now, in terms of what we heard here, the big debates mainly on currency, can the European Union put more pressure on the United States to try and strengthen the US dollar?
I doubt it, no. I think the US is going to be focused on trying to get their economy stronger, so the last thing they're really going to worry about is the dollar, and unless its decline gets to an extent where it's causing trouble. Could happen if oil prices were to start rising sharply from here, but other than that, I don't think that's #1 policy priority of the US, and there's very little that the Europeans can do about it in reality.
What about the Chinese? Is there any inclination on their part to try and get the yuan to a little bit more credible levels?
I think the Chinese are going to wait until they see more evidence that domestic demand is strengthening, and I suspect that when they see more confirmation of that, then they might let the currency go. And then there will be a bit of burden sharing, as Mr. Trichet likes to call it. But I think the Chinese are going to have to be more confident that that's coming. I think it is, but I think the Chinese will want to see it before they actually take any further risks on the currency.
What is the one topic that surprised you here? I mean, it does seem the communique is more or less the same from the G7 as it was back in April.
I'm surprised the G7 even put out a communique. I mean, who cares about what the G7 think? I mean, with a G20 declaration in Pittsburgh that the G8 is dead, the G7's dead. So who really cares what they say? I'm not, you know, I don't know whether it's really, you say it's influenced the markets. I doubt whether it has. I'm sure it's because of some more risk on as opposed to risk off on Friday, why the dollar's moved today. And you know, without the Chinese being present in the G7, who cares what they say? It's something of the past. In that spirit, the thing that really has surprised me here so far is how stuck in the whole Anglo-Saxon mentality the whole nature of this IMF meeting is still. It's quite bizarre. If you look at the balance of the world and what's happened coming out of this crisis, you would think that the only place that mattered in the world was the United States, and it's kind of ridiculous still. I'm quite shocked.
Are the emerging market economies worried about this? I mean, they've been trying to get more votes from the IMF. When do we have to start recognizing that actually they got us out of this crisis in the first place? I'm
guessing if you did a count of the attendance here, I'm guessing the Chinese won't be that numerous. And if you look at an interesting thing I've seen some reference to this morning, the Japanese new government is making fresh noises about an Asian monetary fund. I think many of these countries feel like the IMF is still not really representative of the world that we've moved into and the one that we've got going forward. And if I were the IMF, because in theory they've been given a lot of scope by the G20 to seize the moment and be more genuine, true, independent leaders and arbiters of the world economy, they need to get on and do it. Otherwise, they won't keep their legitimacy, which this crisis has actually given the IMF a new chance for.
Now, we also had the IIF here, where the Deutsche Bank CEO Joseph Ackermann was very vocal in saying that there was a real danger of over-regulating banks. What's your take on this?
I mean, usually regulators respond to the past crisis, so he's probably right. I mean, the amount of obsession on this topic is also symptomatic of the kind of thing I'm saying. You would think that banks were the only people that did anything wrong the past few years, and that the focus on that it remains rather silly.
But then finance ministers say they still have to at least accept the responsibility, and regulating is the only way that we can move forward and not make this happen again.
Well, at the core of the whole crisis has been a huge rise in US house prices that probably shouldn't have happened. And, you know, policymakers should be thinking more specifically about second pillars and where you include financial asset prices in indicators. And the regulatory part is easy for them to make a lot of noise about. But in reality, for them to truly agree a pan-global regulatory framework for banks is never going to happen either. So, you know, quite why they go on about that so much to the exclusion of other things, that is a bit of a mystery to me, but I guess it keeps them busy.
What do the emerging markets want today from the West? I mean, more voting in the IMF, also stop having the dollar as the supreme currency?
Well, you know, I think they would like those things, but of course we're in a bit of a vacuum, because you're not going to get certainly the latter thing about the dollar until the Chinese feel happier about broader use of the renminbi. And also a bit surprised there's not been more debate about the SDR proposals that came out of Governor Zhou earlier this year. That to me is probably the most interesting policy statement I've seen for years by a major central banker, because it could mean a lot, but without China doing more about the use of the RMB, it probably doesn't. And we're kind of stuck in that vacuum, and that's the way it's going to be till the Chinese change, I think.
Now, Jim, we've had some new forecasts from the IMF in terms of world growth, 3.1% for 2010.
They're getting there. They're getting there.
What is your take? I mean, we have a good date, a bad date.
We'd be 1% stronger. You know, we're looking at 4.1% for world growth next year. It's interesting to see the IMF creeping more positive, but I think they're still being too conservative. I think you look at growth in many parts of the emerging world, not just China. It's coming through much stronger than people thought. We had a session ourselves with the Brazilian central bank governor, and Brazil's looking like a really robust economy, which almost definitely got no focus in broader events here. Same's kind of true with India. Turkey itself is not doing too badly, and I think lots of these places are going to be surprising on the upside to the likes of the IMF and World Bank going forward.
What is your biggest concern? I mean, we're saying a lot of the countries here are saying, well, yes, we're in a recovery, but actually it's still very fragile, and we don't know what we're faced with.
Well, obviously there is a lot of uncertainty, but again, another thing which amuses me about these kind of events, everybody goes on, there's all these uncertainties which we never had before, but they're only visible uncertainties. We've always had these uncertainties, and everybody thinks the uncertainties are all negative. You know, there might be a lot of things that turn out to be positive surprises.
So this is what, a political move? So
well, it's just an easy thing for political figures to say. I mean, for example, if we could if somebody could create a much more effective way of providing batteries for solar power for cars, you know, that could cause an enormous boom in the auto industry. You know, why is that just as not possible as some devastating thing going wrong in finance, which everybody's so focused on? I've come from being a week in Asia where the increase in the use of mobile phones in China and India together on a monthly basis is equivalent to half the population of the UK. Yeah, you don't hear any of those things at events like this. It's all this nonsense about regulating the banks and things that can go wrong again. And yes, of course there's plenty of things that can go wrong, but there's plenty of other things that could surprise on the positive side as well.
So let's be a little bit more hopeful. Jim O'Neill, thank you so much for joining us. That was Jim O'Neill from Goldman Sachs. Of course, we'll have plenty more here on Bloomberg Television.